what's going on, everybody? Hey, welcome back to another training video lesson. We've got a good one for you today. Today we're going to talk about the 5-step trading checklist that you must have before placing any trade, all right? So like I said, in this video we're going to talk about the 5-step trading checklist that you must have in order before placing any trade. I mean, when it comes to placing a trade, there's so many moving parts, right? I mean, where's your stop loss? Where's your target? Where do you enter? Where do you exit? I mean, it can get crazy. So I'm just going to give you a very simple 5-step checklist that you must follow before placing any trade. And then we're going to look at the chart and actually see some of these as an example. All right? So let's go ahead and jump into it now. All right, so number one, identify market structure. Okay, market structure. Now, what is market structure? Market structure is AKA the trend. So I want you to ask yourself this question. When you are looking at any trade, what is the path of least resistance, right? What is the path of least resistance? Or in a nutshell, or in an easy way is, hey, what's the trend? Is it an uptrend? Is it a downtrend? Or are we channeling or sideways or in a squeeze? So you must first, number one, identify market structure. So if I was going to draw on here, for example, you guys know an uptrend is a series of higher highs and higher lows. A downtrend is a series of lower lows and lower highs. So channels are anything other than that. So it could look like this, equal highs, equal lows. But an easy way to see if a stock or a Forex pair is channeling would be, is it in a squeeze, right? Because the squeeze by definition is telling us that it's contracting, it's taking a break. So it's forming some type of complex consolidation pattern, right? So let's go ahead and let's look at some charts and let's see really quickly. All right, so the first thing I'm looking at is the SPX. So you want to ask yourself, right, what is the market structure? What is the trend? And when I say the path of least resistance, I mean as a beginning trader especially, you want to focus on trading with the trend, right? The path of least resistance. If the trend is up, then we're going to focus on strategies that take advantage of uptrending stocks, whether that's call options, bull put spreads, naked puts. We're going to focus on those type of strategies. So if you're looking at the SPX, the first thing I would ask myself is, hey Jeff, what is the market structure? Well, you can clearly see that this is up. Here's a high, here's a low. Now it was in a squeeze, so at that moment it was consolidating. But if we break it down right now, and this is as of August the 31st, so it's right now. So we want to look at it and say, what is the trend, right? The path of least resistance. So we're in an uptrend. So we look at the high, we look at the low. Right now, we're at a high. So the high hasn't happened yet, but we know we are already at a high. So the next thing we'll be looking for is that pullback to a higher low. So when I look at this, it's very easy for me to say, hey, this is an uptrend. So then let's go ahead and just look at any stock. We'll look at Johnson & Johnson. I don't have any plan. I'm just basically pulling it up right now. And then let's go look at the trend. What is the trend? Okay, the path of least resistance, the market structure. Here's a high. Here's a low. Here's a high. And as long as this low stays above that low, it's up. We are in an uptrending market structure. So let me just look at another pair and just see, let me back it out a little bit so we can see if we get a downtrend. A lot of things have been in an uptrend. But if we go back right here, then you can see that the market structure at that time was down. Another easy way is the path of least resistance, right? The moving average is going down. But anyway, you got a high, you got a low, you got a high, you got a low, and I can expand it and make it look a lot easier, but the bottom line is, number one, what is the market structure? Are we up? Are we moving down? Or are we in a squeeze and we're channeling around, and then focus on trading in the path of the least resistance. Okay, so let's go ahead and go to number 2. Identify the area of value. Now ask yourself this question: where might buying and selling pressure come in? So area of value, and you see right here, another way is to identify it as support and resistance. There's many ways that a trader can identify support and resistance or an area of value. One way would simply be, where does price stop going up and start going down? That is resistance. Another one would be, where does price stop going down and start going up? And then so if price is coming back into this area, we would call that support. That's an area of value. That's an area where buying pressure might come in. And so here's the thing: if we're trading with the market structure, up, boom, and it's pulling back into a major value area, then we can identify and say, okay, we're coming back, we're pulling back into support or value area. This is where I want to start looking for signs to get in the trade. This is where buying might come in, okay? And it's the opposite if it's in a downtrend. So if we're in a downtrend, right here, we're looking for resistance or areas of value where selling pressure might come in. Now, if you notice here on my thing, my slide, you can use a lot of stuff. You can use highs and lows to identify support and resistance, moving averages, trend lines, all that good stuff. So let's go take a look at a couple of charts and see if we can identify areas of value. And let's just back it out. So right here, for example, we know that price is pulling back into a moving average. So we can tell ourselves, if we're using that moving average, that might be an area of value or a support level, and buyers might step in there. And then we'll talk about a couple other ways in a minute to handle that, but you know, even right here, this is support. So if price comes back into the support area, that's an area of value. Buyers might step in there. So if we back it out, and let's see if we can find something that's channeling, or let me just go look at another chart. We'll go look at Lilly. So let's just, we'll back it out here, right? Again, moving averages, it's coming into the 34. So buyers might step in there. We don't know yet if they're going to step in there. There's other clues that we can use, but I need to identify on a chart, hey, where's the area of value? If I'm in an uptrend, because the market structure is going up, where is support? Support can be any one of those moving averages. I can also, like I said, draw a trend line. So if I go over here to my trend line tool, I can draw a trend line from the low, let's say connecting the low like that, and boom, that is a possible area as well. It's bounced off this area in the past, so it could bounce again. And if I'm looking at the trend line and I'm putting all the pieces together, I can tell myself, okay, we have a moving average right here. We have a trend line. That's a confluence, so that's 2 points. And then what I could also do is I could go back to my tool and I can draw, you know, an area right there. This is the support level. So then if it breaks this, it could come down to the 50 simple moving average and this line, and that could be another area of value. So you just want to identify really quickly, kind of going back through this, you want to identify the area of value. And remember, ask yourself, where might the buying and selling pressure come in? What are my support and resistance levels? And you can use, again, a number of things: highs, lows, moving averages, trend lines. It's all good. Okay, number 3. After that, you need to identify your entry signal. So you want to ask yourself first, do I have a trading plan? Because one of the things that I teach my students is we're not going to just enter a trade, you know, on a whim, right? Because we think something is going to move up or down. We have to have a trading plan. Let our trading plan dictate when we're going to enter a trade. The most important thing about a trading plan is it takes your brain, your emotions out of the picture. When A happens, we do B. When B happens, we do C. So if you do have a trading plan, what's going to get you into that trade? So is it going to be an aggressive entry? Is it going to be a more moderate, conservative entry? Is it going to be a break of a trend line, a break of market structure? For example, let me draw a couple things right here. So let's say we're pulling back into a bull flag, and this is the candle, right? Let's say it's a hammer. So is it going to be an aggressive entry? Am I going to get in if price trades above the high of that day? Okay, more of an aggressive. Because what could happen is it could get triggered and then reverse on me. But that's an aggressive entry. So you need to decide, if I'm in a squeeze, am I going to get in as price is falling back into a support level as it's actually coming down? That's an aggressive entry. Now, maybe more of a moderate entry might be, hey, if it's in a squeeze, let me actually wait until I see the momentum shift. That's more of a, well, that could be deemed as a conservative entry. Let's kind of put it in that category. Actually waiting for that momentum to shift. So you're in a squeeze, it's coming down, and literally wait for it to shift. That is more of a conservative entry. It's the same with the flag. If you're pulling back into flag, actually waiting for the candle to close. So maybe you have this candle and you wait for the candle to close above the high of that candle. That's a conservative entry. So a moderate entry might be, it's coming into support and you got a bullish candle pattern. So you're not necessarily waiting for the momentum to shift. It's more of, hey, I got a bullish candle pattern and I'm going to enter based on that. And so you need to decide, hey, what's my entry signal? We know market structure, right? What's the trend? Is it at support or resistance? What's going to cause me to get into the trade, right? The momentum shift, catch that knife into support, and so forth. So if we go and look at a chart, we go here. Let me get that drawing item off. So as it's coming down into the support level, am I going to, number one, just jump in at this area? You can. It's a more aggressive entry, and depending on what my trading plan says or the guideline that I like to follow, maybe I enter as it's pulling back, right? We're in a squeeze. So another one, again, might be it's coming down into this area, and I literally wait for this arrow or this momentum to shift. Or I wait for the histogram momentum to shift. That's a more conservative, right? It's coming down into support. I'm going to physically wait for the momentum to shift, or I'm going to wait for that arrow. That's more of a conservative, and there's nothing wrong with that. It just depends on what is your lifestyle, right? Or what fits your nature, pretty much. Okay, and so that's kind of it right there. So have a trading plan, and then let the trading plan dictate your entry. Sound good? Let's move on to the next one. So the next one, hey, identify your exit. We're going to start off first with identifying your exit when you are right. So ask yourself, is this, so first of all, when you're right, you hit your target. So I want you to ask yourself always, what kind of trade are we taking? Are we taking a short-term trade? Or are we taking a trend trade? So as you know, a trend trade, you ride the trade until it ends. So when are you right? It's, hey, you're right as long as that trend stays intact. When market structure breaks, then you are wrong, right? It's going up, boom, inverted head and shoulders, bam, breaks the neckline, you're out. That's one. So if it's a short-term trade, like for example, a squeeze trade, if it goes against you, okay, well, we're not talking about against you. In this case, it's target. So if it goes in your favor, when you get out, right? Are you getting out at the Fibonacci target are you measuring the distance from high to low and projecting that out? So where are you right? Where are you going to get out? You know, I teach my students this concept of it's your money, it's not your money. And I tell them when they're taking a short-term trade and it hits your target, that's your money. Get out. The rest is not your money. So when are you right? Is my target going to be fixed, or is it going to be based on profit? In this case, it says loss, but it's more on the profit. So fixed means, again, we have maybe that 127 extension out of the squeeze, so I'm going to exit when it hits that. It's fixed. Or maybe we have a profit target. So the profit target might be things like, hey, listen, if I make $5,000 on this trade, I'm out. And one of the things my mentors told me a long time ago is if you have a profit target, it supersedes all other targets. It comes first. But you need to decide, where is my target? Is it going to be fixed? Is it going to be, you know, based on a support and resistance area, a swing high and low? You heard of the term swing trading. That means buying at support, selling at resistance, you know, selling at resistance, buying back at support. So you need to know all that stuff. And, you know, is it going to be a trailing stop loss? Is my exit going to be a trailing stop loss? So as the price moves up, right, am I just going to keep moving up my stop loss to lock in profit? Is it going to be a mental stop loss, right? Or a mental target when it hits my target? Then am I just going to then go in there and manually exit? Is it going to be a hard target? So again, maybe you set it at that 127 extension and you, boom, you stick to it. So you need to decide, where are you right? So for example, we go back to this trade and I get into this trade. Let's say I get into this trade right here. Where am I right? Is my target going to be the 127 extension up there? So I can then go into my drawing items, and maybe I draw it down from high to low, and I project the target at the 1272 extension. That's one way. Am I going to measure major lows and highs and project it out there? So I just need to decide, right? Maybe my rule is if I make $1,000, I'm out. Simple as that. So you've got to decide, when are you right? When are you going to take profit? Fibonacci targets, you know, prior resistance and support levels. For example, let me give you guys another thing that you can do. Okay, you can, in this particular case, you can get your drawn items and you can measure it like that. And you can project a target. So you could say if it comes up and works its way all the way up into here, boom, I'm out. So it can be a trend line. There's really no right or wrong answer as long as you actually have a rule. The number one thing I said was have a trading plan, right? Let the trading plan dictate what you are going to do. So let's move on to number 5 in the checklist. Identify your exit. But now it says, when are you right? So we're going to change that to quick is, when are you wrong? Right? When are you close? Or in this case, when are you wrong? So I'm not going to change it right here, but just mark that out. When are you wrong? Now this is your initial stop loss, right? When are you wrong? So I want you to ask yourself again, is it a trend trade or is it a short-term trade? Because trend trading exit rules for stop losses are different. They're different than short-term trades. So my short-term trade, right, if I'm doing a squeeze trade, for example, maybe my exit when I'm wrong is a break below support. Or maybe it's a close below support. So we've got a target as an exit, and then we've got, hey, when are we wrong? Because in reality, this is the most important thing that matters anyway, is it doesn't really matter when we're right. What really matters is, hey, when we're wrong, where are we wrong? You need to identify. And again, it has a fixed target profit. So in this case, it's not the target, so it might be a fixed, fixed percentage. You know, maybe you buy an option and you tell yourself, hey, I'm wrong at 50%. You know, that's what some traders do. They might buy an option that's cost $2 and they might put a stop loss at $1. I'm wrong if I lose half, right? 50%. You might do 30% or 25%. And again, you could also judge it based on, like we did a minute ago, but, you know, swing highs and swing lows, or in this case, support. And I say support and resistance because in swing highs and lows, because if it's in an uptrend, it's support. If it's a downtrend, it's resistance. If it's a downtrend, then you're going to be worried about the high. The high, you're wrong if it breaks the high. And if it's in an uptrend, you're wrong if it breaks the low. So that's why I use both that terminology. Now, trailing stop loss. So in this particular case, this really comes into play when you are managing your profit. Because one of the things that we talk about with traders, and my students specifically, is when you set your initial exit, and remember, not right, wrong. When you set a stop loss, you never adjust it down. Or if I have a stop loss because it's going to never adjust it up. So once you set your initial stop loss, that sucker's set in stone. So the reason why I put trailing loss is as it starts to move in your favor, and maybe it's not at your target, but it's working its way up. When are you going to step in and adjust profit? When are you going to step in? So that is an exit rule. So if we go back to our chart that we were looking at a minute ago, and we go look at, let's say, was it Lilly right here? So when I get into this trade, or if I get into it, where's my initial stop loss? It is what it is. Okay, you also again get to decide, are you going to do a hard stop loss? We talked about this in one of my other videos about 5 exits. Is it going to be a hard stop loss? Is it going to be a mental stop loss? But if I get in and it starts to work in my favor, and let's say it's up here at the resistance and my target is up here, when do I step in and start protecting profit? Do I trail this stop loss up along the way? Do I have a rule that says if it makes 50% of the move, I can move to break even? You just need to follow what your trading plan rule says, but you got to have an exit predefined ahead of time. That's part of the checklist. So if we're going to recap really quickly, so 5-step trading checklist. Number 1, identify the market structure or the trend. Are we up? Are we down? Are we side? You must do this before placing any trade. 2, where is the area of value? Where's support? Where's resistance? In an uptrend, we care about support. In a downtrend, we care about resistance. Number 3, identify your entry signal. Hey, where am I going to get in? Am I aggressive, conservative? Am I a bounce trader? Is my exit or entry gonna be a breakout entry? You've got to decide that based on your trading plan rules. Number 4, you need to identify your exit when you are wrong. So we flipped it a minute ago. I kind of got it backwards, but still the same thing. Where are you wrong? Where is that initial stop loss? So we just talked about that one a minute ago. That's really number 4. But you guys get the idea. Where are we wrong? Hard stop loss, mental stop loss, when we getting out. And then, where are we right? Where's our target? Are we going to employ some type of adjustment rule along the way? Are we going to use Fibonacci extensions? Are we going to use support and resistance lines? You must identify when you are right. Now, if you have a trading plan, these are some of the 5, well, not these are some, there's a couple more, but these are the 5 main checklist items that you need to have on any trading plan. And if you would like my bullish breakout trading plan equipped with all of them, there's 7 components that make up a well-written trading plan. If you want my bullish breakout trading plan where I outline entries, money management rules, exits, all that stuff, these and then some, then down below in the description you're going to see a link to get